Okay, hello friends. Kind of just wanted to make a quick market update. If I haven't had a chance, I wanted to go over this a little bit more. As we've been talking about, really had to really break above 30,500, or we really needed to kind of go down and either break that 25, or there's a lower level that we've talked about closer to 21. I said I would expect a short term for kind of like a quick run up to 27, 28 before it kind of turns around and starts to find potentially new lows. And so I kind of want to show you on the chart what my thinking was along the lines of this. And so oddly enough, while my predictions might have been right, I have been timely wrong. And I'll show you what I mean by that. So basically, this is your Bitcoin chart right here. Wait, I'm trying to figure out what size I want to make it. So this is your Bitcoin chart right here. So basically this level right here, right around 25,300-ish, is really kind of the level I was watching because, we came back up after breaking it. We tested it here. We tested it here. And then right here, I was waiting to see what was going to happen. Does it reject or does it go up? And based upon this green candle, I anticipated it going up just because, come on, what's all this buying pressure about? I believe this was ETF news to some extent. And then, or maybe it's a bank thing. I can't even remember these days. But now it's pretty sideways. We talked about it really needs to hold above this 30,500 level, which is right around here. Oddly enough, you can see we only have one close right here, and we have one close right here. I guess we got a couple in here. But the point is that we wanted about 7 days worth, maybe a week or two of solid consolidation, slowly but surely getting some more closes above. Like, for example, this was bullish. This was bullish. Even this one is bullish. This wick wasn't. But the point being that, hey, for a second, I was like, wait a minute, if we don't have a reversal soon, this is going to be pretty scary. And so kind of based on this candle right here breaking down, I was like, this is a full reversal, which means we're going down. And that's kind of what led down to it. Now you can see I kind of have my bubble over here. This was actually my internal projection is, we have this trend line kind of hitting this point, hitting this point, hitting this point. It would make a whole lot of sense if it really kind of came all the way over here first before making a decision. But really based upon whatever reasons, news and all that, it ended up happening, a week earlier than I anticipated. So I was not anticipating this. And when it did happen, when I saw the prices around here, I went to my computer to see, hey, maybe what's going on? Are we just testing it now? What's the deal? And it was like, bam, forget you. And crazy enough, it literally went down to 25, this range that, is consistently retesting these levels that we've talked about time and time again as just such strong support. And I think I made the video or the post. I don't know. I can look at it. Do I have enough things open? Here we go. This was the 25th. So whatever day that was. So I made the post right here saying I do expect it. This is what's called a bear flag. Very, very standard, straight line down, straight over. That's very bearish. But the way market makers work and the way that you're going to see a lot of really the institutional money trade is they want to trap as much money in as they can so they can build their shorts before they actually manipulate things down. And this is markets across the board. The lower the volatility, the less volume going into something, the easier it is to move it. And so this was based upon, a grayscale, I believe, announcement or something. So obviously had a big pump. I said 27 to 28. We got pretty dang close. Oh no, we did. We did hit 28. So really in this range is kind of, I was thinking more like 27.5, but I ended up shorting it like right around here just to catch a little leg down. But at the end of the day, you could see, hey, big pump up, and we probably saw a whole lot of shorts being put in here, which is telling us we're definitely coming back down. Now basically where we're sitting is kind of really just retesting this same level. Kind of got to figure out what's going on. I want to show you a couple of different things. At the moment, you could argue that we're really in no different spot, right? It's still a bearish formation, this being somewhat of an anomaly because of the reversal on these red candles. But if we go and we look at the US dollar is in a very interesting spot. Let me turn off whatever that is. So when you look at the US dollar, really strong support at 100, mainly because it's just a solid round number. But you can see kind of this trend line coming down, really where it's at. For a minute, let me see, this is actually, maybe I did this on a different time, whatever time interval. Just trying to see here what it might look like if I look at it differently. See, that kind of works. See, there's two ways to look at this. That's what I'm going to tell you. Is this could potentially be an issue or potentially be a variable really telling us, hey, we tested it, it didn't work. We tested it, didn't work, but we're testing down here. We're testing down here. This is a W, which made me really feel like, hey, we're going up. As long as we break this, we're going up for a while. And, you know, obviously had a little bit of a sell-off and a little bit of a retracement. This retracement tells us it's very bullish. Just because we broke truly below, we closed below several days in a row, that would be a sign that, hey, the dollar is going to be down for a little bit. Assets are going to be up. But as it comes up, we're now in a spot to where really kind of we got to break through this, which we did. And again, let's just say, again, with the lines, I've talked about the lines all the time. Like you can draw them pretty much however you want to explain whatever narrative you want. And so here's a silly example right here. Maybe you call that good. So if that's the case, we've now broken above, we've come down, we've retested this, and it's bullish going up, right? So instead of testing here and being bounced down, testing here, being bounced down, coming up, we broke through. Now we're going to test this level again, and you know we could test it again, but now we're on top of the line, which means we're more likely to go up. So if the dollar's going up, as you know, that means assets are going to be coming down. So that's one way to look at it. Which means asset prices, again, would be coming down. If you hypothetically were just to draw the lines on these three, again, something like that, you get the picture. It's never going to be exact. This candle now just puts you more in a, well, wait a minute, now we need to wait and see. So pretty much the next couple of days is really going to tell us where we're going to be at with the dollar. And in fact, on Monday being a holiday, Tuesday, I could see a gap up to up here, which would be very bullish. And then it would retest and then it would potentially take off. So if the dollar is going to be bullish again, that means that these assets over here are going to struggle. If we go and we look at, you know, the S&P 500, for example, we've got another bearish pattern. So we have here, let me draw here. So we've got a shoulder over here. We've got the head right there, and we've got another shoulder that's potentially forming. And really, as long as this is your neckline right here of your head and shoulders. Oops. So as long as it's definitely flat or sloping up, that is another confirmation of the head and shoulders. So this still is a intact formation. But basically the level that we're looking for is like right in here. So if we put in a horizontal line somewhere right around there, oh no, Brian, come on. You get it. So if the S&P comes up to 4605-ish, right here, I can tell you the exact number if I hover over the candle. The top, you can see the high was 4607. So if it goes over 4608, it is bullish. It's still going to go up. Really, so much of the stock movement is pretty much like 5 stocks right now. If you took out those 5 stocks, I heard someone on YouTube saying the other day, if you took out those 5 stocks, the returns have been about like 4 to 5% for the year. So there's really nothing spectacular about what's happening, except for those couple of things. Nvidia is obviously one of them. It's running, it has no competition. You know, it's just a matter of time. Tesla kind of had its play, and you know it's starting to work its way down as well. So the bottom line is really kind of an indecision period at the moment, or in a decision period, in that the dollar, are we going to break through or not? If the dollar breaks through, you can pretty much expect this to break down, at least to down here. And what does that mean for Bitcoin prices? Same thing. There's less volatility over here. Also, another interesting, they say you don't trust people on YouTube, but at the same time, it's like, hey, every now and then somebody's got a pretty good idea. One of the ideas was that there are these people chasing, these alpha chasers. They're just chasing wherever the gains are. And so when Nvidia is going up, they put their money over there, and that kind of brings Bitcoin down. And so they move their money back to Bitcoin, and Bitcoin pumps for a little bit. And then, another stock's going to pump. So they just move their money around like that. And obviously that impacts all of them. But, people who I guess have the time to do that are doing it, and they're taking the risk, and that's fine. So that's pretty much the story right now on Bitcoin. You got a pretty good picture of what's going on. I've been going about 10 minutes or so. And so that gives you a little bit clearer picture. Ethereum I haven't looked at too much lately, but it's the same thing. You've got this awkwardly downward sloping channel, like we can't seem to break up from here to here. We had a breakout here, it failed, it came back down, had a breakout here, so I could draw lines all over it, I'm sure, and explain some narrative, but you get the idea. At the end of the day, whatever Bitcoin's going to do, pretty much everything else is doing it too. So So far, so good. Pretty much just waiting to find out. Are we going to break 25? If we break 25, that's really where these levels come back to. Again, just a bigger narrative. This line is from, this long line is from way up here, these trend lines. And the only reason that was on there was as a support. So a potential support level could be around 23,000-ish. As it kind of follows down that line, we kind of had that downward sloping channel anyway. Again, the lines are kind of rickety right now, but again, you could straighten them out and try to line them up the best you can. Either way, it's just some level of support that could potentially maybe be held at 23,000. You do kind of have this high right here and this high right here that would really act as a support zone as well. So that's really two things screaming support right here. That says, you know, Bitcoin 23 to, well, even up to 25 is a fairly strong level of support, or a medium level of support. The strongest level supports are going to be down here. This FTX fallout, which I don't know is going to be too much of a variable these days. It's really just this CME gap that I've been talking about forever that goes down to 20,200 something up to 21 grand. So we're either going to kind of come down to these levels and quickly get the heck out of here and we're heading on our way up, or what's kind of more likely to happen, in my opinion, is we might put in new lows. And the reason that I say that, let's go to a weekly chart, is really back in 2019. This is kind of a similar vibe here. This was our actual bottom right here, our actual, you know, bottoming in for that cycle. Well, actually, I guess it was way back here, November of 2018. So, okay, this kind of invalidates my thesis, but at the same time, it might justify kind of same thing, right? We've got a little bit of an upward sloping trend, but it has to sell off to a certain point. And when you kind of start to look at these comparisons, we've got big run-ups here and there. Again, market makers just doing whatever they need to do to build their shorts. And then we had a lot of liquidity down here. We had a lot of volume down here, which caused all these wicks. And that is going to be your sign for tops and bottoms. So like right here, clearly topping out right there. That's a very, very clear shooting star. And so that's going to be coming down. This is a strong tail right here. This is a strong tail. This isn't a dead giveaway one, but either way, the point is that it kind of hit that mark and then took off. Why? Because the halving was somewhere right around here, I think it was. I think that's right. I'm sorry, I'm looking at the wrong area. This is the halving right here. 17, 18, 19. Yeah, so this would be the halving. So the point being this was the low. Golly. So just delete the last stuff that I said. I'm looking at the wrong part of the chart, wrong year. So this is back in 2018-19. The bottom was in, I believe, February? No, February is when I got in. So it was in December 18. So basically a year after the high. But you can kind of see, same story I said over there, kind of see over here. You're kind of seeing these big run-ups and this, you know, kind of solid consolidation. And this is on the weekly. So if I was to change it, boy, I am really rambling here. Hang on. Fast forward, delete, feel free. Okay, so here's your halving. Here we go. All right. So kind of same thing. You can see how these patterns play out, right? They come down. They're finding resistance at some point, especially right here. You have this strong resistance, which is kind of what the 25,000 level is, in my opinion. And then what happens? It just eventually dumps. After trying it, it's all sideways. Very, very little movement, and then it dumps. Well, what are we seeing really over here? We're seeing a lot of sideways movement, not a lot of big candles, which has been kind of the year, all year. All these tiny candles, all this freaking tiny candles. I mean, there's really just nothing going on. It's absolutely bananas to me. And you could call this a kind of $30,000 section really a potential anomaly and create somewhat of a downward sloping trend if this keeps sloping down. And so we'll have to see. But like I said, this green zone is kind of your level of, hey, we're trying to get there. We're trying to get there. And at what point does it just say, forget it, I can't? Really kind of go down. Really, as of right now, if I had to make a decision today, it's just about filling this wick. So, you know, potentially down to 25,200. That might happen the next day or two. But again, what happens after that? That still keeps us in that same zone. At a bare minimum, I think we've got to at least try this green box right here. You know, this 23,000-ish to 25,000-ish, somewhere in there to kind of fill in some of this liquidity. But if this doesn't line up, if that doesn't hold, look at all this liquidity right here. There's nothing stopping it, really. I mean, there's all these little minor levels of support that you can really kind of argue, but at the same time, like, we've tested them and we've gone both ways through them, and so maybe they're not as strong as we think. The CME gap is a very strong signal, and so again, just kind of giving you an idea of my opinion on what might potentially happen. But I still think we need to kind of fill this green box here. Are we stopping at 23 and going up, or do we come down to kind of some lower levels? If we come down to these lower levels, I believe we're going to hit that gap, because all these green candles, there was nothing challenge them, and that's a lot of liquidity going up with nothing retesting it. And so typically that's probably going to be the case. And I would argue that at a bare minimum, it's going to come down and at least 50% of this wick right here, so about 19. It'll basically dip right under 20,000, and then it'll probably take off. If it's not going to do that, guess what? We're coming down, then we're coming down, and then we have a conversation of potential new lows. So again, I still think very similar to back over here when we were talking about 2019, that you're going to have all these consolidations through the fourth quarter, and then ultimately it's just going to be like, man, forget it. We really just kind of need to dump. If we have a recession, guess what? It's going to, again, line up with that. With the halving coming up, the timing just couldn't be better, for people who are wanting to just manipulate, or not manipulate, but move the markets. And so they will, December, January, February, March. Basically, that first quarter is really when I would expect to say, all right, the low should be in. We should be able to look at potentially investing some more, because the halving's coming. Once the halving comes, it kind of needs to readjust, because, it gets caught up. And then that brings back the March of 2020 question, but I still view that more as an anomaly. You could say that by the kind of the V formation. So anyway, that's it. I've gone on enough. That's about 16 minutes. Definitely love all the questions that have been coming in. Believe it or not, I am working on it. I am trying to come up with some answers and stuff. I just thought it'd be better if I kind of research some stuff. So rather than just spew my opinion. So I'm doing that. I've got a couple done. I'll be posting them. I actually am thinking about making some videos if I can find some time for that. And we're going to post it, and we've got some time, but this fourth quarter is going to be kind of interesting. So buckle up and let's go on the ride together. We'll see ya.